Hey guys, welcome. Sorry about Friday. Hopefully this little program is working now. Uh, and using not recording through GoToWebinar. Hopefully that means you guys can actually stay online and it's not going to kick us off. So what we're just looking at the economic calendar this week, and the reason for that is that we've got there's not a quarterly meeting, but they do release a statement, the FOMC, which is early Thursday morning Sydney time, 4 o'clock. And after that, there's obviously the non-farm payrolls, which I'm not too worried about that, but certainly GDP on Thursday night, followed by FOMC. I was reading that 3.1 is what the market is expecting, but it's some guys are actually calling it closer to 1 than 3.1. So that's going to be interesting for the GDP in the US. So with this, you'd want to stay away from trading in the majors. Um, Maybe this week, depending on how they're setting up. Such as the pound is looking reasonably good. You may want to take it, but just not expose yourself to the full amount of risk. So let's go into the emails. Hi guys, thanks. All right. So the first one we're looking at is the rand here. Someone's said, "Is this a possible trade for today?" There's a bit of a horizontal off this high here. There's some lows there. But quite literally, if this is that it's trading on this cyclicity, and I noticed that you've got this weekly one here from that low to that low. I've got this monthly that obviously that clear trend on the monthly has been quite strong. You've got that weekly, so if this is your cycle and you're looking at getting in here, then this cycle, the last cycle, has failed to make a higher high, so you're not having that cyclicity. So it's not all that, for me, it's not all that strong there. I think the US dollar is going to start getting bullish soon, but um, we are sort of down on the lower side of the momentum. There is it's a lower probability trade for me, but there is a chance that will make you money, but I just don't see it as a huge opportunity. Trend line, horizontal soft support, finding support of the 200 EMA, fib retracement. Trend, clear major, hidden divergence. Yeah, 0.25. I can't, it's. I think it'll probably pull up around these highs here. It may well continue to go, but yeah, to me it's under the 50 EMA, and this, if you're looking at that, then it's a phase two trade. If you're looking at the cyclicity, then this move here failed to make a higher high, so it's not that strong a setup. It is a setup, granted, but it's not that, to my mind, it's not as strong as some other ones, such as the pound, which you're um, looking at, and you also in your email. Where we are getting that cyclicity. You've got hidden divergence. There's no trend line support, possibly not. Horizontal. Is that soft? I thought $1.70 was quite large. I know the price is underneath it at the moment, but if today's bar closes above $1.70, I thought $1.70 is quite large. If you look at the monthly, it's this high here. Yeah, which is also that low. And to me, that is quite a significant level. $1.70. And so if we can close back above that, it might be 70.35, but let's just presume it's 70 because of the chart, and we can see how it's reacted to it quite strongly, and I'd like to see it above that. So I'd say it's a strong horizontal, and if we can close back above that in today's bar, then yeah, absolutely. Did you put this soft, but you're 69.81. Yeah, but that's your target, and to me this is a stronger setup than your rand one. And I can see that you've increased your risk to 0.5% on it, which is good, because it got 9. There's no trend line support. I think that's a... No. Fair enough. Okay. So that's good. You guys all still there? Still listening? Okay. Alright, this one, I thought this might be issues. Only meets 2 out of the 4 criteria items required, so not trading, waiting for bullish price action. Do you see strong horizontal support for this? Not at that price level. Yes, it's hit the 618. That's nice and fabulous, but I see the horizontal support being a bit lower. Pretty much where you've indicated here, this where price is. There's really no horizontal, so yeah, this is I'm glad you decided that. And so you look at the horizontal, it's basically $1.40. Yeah. $1.4. So it's that low there. So we're not quite there yet on the daily. And so it may turn without us getting that. It's still 170 pips away, isn't it? But if we draw the phase 2, that's still in front of it as well. You could make an argument that there's a horizontal across here as well, but it's a softer one. The stronger one is obviously $1.40. So yeah, that's whilst we might have price action bouncing off the 1.618, that's just one of the arguments. The other, we're not seeing any divergence there yet either. In your feedback, you've noticed divergence from this low to this low, but you've then drawn your Fibonacci across that from that low to that high. So you've said this is a phase 2, and this is a new phase 1, and that's what I see it as well. And if this is the new phase 1, then you want to see the momentum coming out of this new phase 1, not from the previous phase 1. So you're looking at the divergence as cycle to cycle. Whereas with reversal divergence, you want to see it out of the end of the move, at the end of phase 1. So something like, I think the Euro Yen had it. So here we are, we're in a phase 1, as we can see from this high, last time it was near the 50 down, and then we're getting these lows here, and the divergence is, or our momentum indicator is making higher lows. That's what you want to see, whereas the Euro Aussie is just straight down and back up again, and there is no divergence. I think the Euro CAD is it's double bottom almost. But I hope you see the difference there between the Euro Aussie. This move here is a phase one, and we're not seeing that divergence yet. We may come down and make a lower low and get that new phase one, but it's sorry that make a new low or a similar low and get the divergence. But at this stage, that's not just not there. Divergence is there, but price in Euro Yen seems to still be falling, so it is a conundrum. And you see the difference now. Okay, cool. Euro Yen. Yeah, some people I think might have got into this at this point, and you know, okay, with Euro had a bit of weakness, but look at the Euro dollar itself it's so overdone. It's going to have a bit of a snapback at some point, and come back and test that 35. Yeah, and in that you'll get the Euro Yen doing its phase two. Okay. So Euro Aussie. Next one we're looking at is. Okay, before I go to this chart, I've got an email about how do you change your password? So just got a new account. What you need to do is go into Tools, in your MetaTrader, Options. Then in this box, you go to the Server tab, and across here you go to your it says Change. So Change, yeah, and put in the password that I sent to you in the email, and then put in the new password that you remember and can repeat it, and then click OK. Pretty simple stuff. So that's Tools, Options, Server, Change, current password, new password, repeat the password. And that's it. Okay. I noticed the Kiwis raised interest rates, but the price drop doesn't. A rise in rates normally have a positive effect. Yes. A rise in interest rates normally does, and you can see that last time they did rates that there was a rise. I might have been in here, I think, one of those days. However, obviously they raised rates on this day, and it had a massive drop on Thursday. He did it, but he also it was how he did it, and with the commentary that it was that came out from the central banker saying that the currency is well overvalued and should be a lot lower, and you know, I have to agree with him. But then he's raising rates because higher rates, you get attracts a lot of funds because it's a higher yield, and everybody's chasing yield to get decent returns. So they put money behind those kind of higher rates. It is a bit of a paradox, but on Thursday, but it was more to do with his comments. But yes, normally you're right. If rates go up, currency goes up. If rates go down, currency goes down. Okay, so to the pound. Great setup. Wish the trend line was at the. Great setup. Wish the trend line was at the 50 EMA. Okay. With the trend line, I'm not sure why you didn't go to that low there. But yeah. Order buy as well. 50 EMA should provide strong support. If the $1.70, I think is the strong support. Yeah. 13 pips below stop loss entry, waiting for ring low confirmation for exact entry. Yes, good. Target prices between the 127 and 61 fib. Okay, cool. Stop loss 60, target price 277, risk reward is 4.6. Nice, 60 pips stop loss. That'll change because just entry, we don't know where the entry is yet. As you say, there's no price action fib retracement. Excuse me. So you've got the 50 fib, perfect as your support. Yeah. Even if you moved it to the bottom of that low there, it's not quite, but this is the first close above the 50. The market motored from that, so that's where I measure it from. We've got the 50 fib offering support. We need this bar to be full of buying intention, making a higher high and preferably closing above $1.70. If that's the case, then you're going in and saying, yep, let's get in on this. And yeah, maybe it will be a 60 pip stop, depending on where this bar closes, but we don't know where it will close. What was detrimental about his comments on Kiwi? Nick, mate, Google, go and use Forex Factory and find out what it was. He's talking about the currency being too high and that interest rates are not moving again now that he's put them to 3.5. Mate, it's a wonderful service, Google. If you want to know, if you've got a question, just punch it into it. Okay. Yeah. So with your, I don't know where you drew your fib from. Okay, so you've gone from there, and it's just in front of the 50. But yeah, if you come from this bar here, which is the first close, then you get the 50 fib. So you'd have retracement support. You don't have trendline support, and you're just waiting on the bullish price action. Otherwise, that's good. What's this? Oh, this is your target. Okay. So in here somewhere, yeah. Whether or not you actually put that price into your order, or you just trail the stop and see how that see how much you can get out of it. That's individual trading decision. Euro yen ATR trade management versus Euro yen daily. Okay, so I've got. Let's go to this one first. Works out with a low risk reward on this. Yeah, if you were looking at this in terms of going a few pips below that swing low, the risk reward on this turns out to be, don't know what all that is, but candle time. Risk reward is 1.2, so that wasn't that crash hot. But if you do it this way using ATR, shit, you would have got stopped out, wouldn't you? Geez, you'd be pretty close to being stopped out. But if you didn't get stopped out, you would have been very close. And then you target, so you're risking what? 2 point TP2 risk. What's your risk? So you're risking 100 pips. Risking 100 pips, and you're going for 123 in the first one, and the 100. What? 123. I'm not sure. You might, using an ATR, you might get a higher risk reward. I can understand that, but I'm not really sort of following this. In terms of you take profit, risk reward is 1.74. Okay. Take profit 2, risk reward is 2.6. Alright, average risk reward is 2.1. Okay, that I don't understand. That's pretty straightforward. And this was an ATR target, this one. I wonder if that is an ATR target. I was using Francie, yeah, I'll answer that just a sec. Right. If you use a stop loss of 1.25, which is ATR 7, the risk is lower, but the stop is above the bottom of the ring low formation. Okay, so your stop loss is not underneath the low. Yep. Unfortunately, using 3 times ATR as a second exit, it is closer to the previous peak and may mean the probability of reaching it is lower. Yep. Nonetheless, it means that the potential risk reward is over 2 and makes the trade worthwhile. Even if the whole trade is exited at the first take profit level, the risk reward is 1.8. So the question is, what do you think of going into the trade with a tighter stop, which is still at 1.25 times the daily range, but above the previous ring low? Look, I think that your safer place for the stop is here, but that's the way I trade. I don't mind if you want to instigate using the ATR. Obviously, you were damn well. If you had gone in, you would have been sweating off that low, because that's you're pretty bloody close. But the other thing is with your targets. The other thing I wanted to say was this target up here, the 3 times ATR. I'd trail this first one along the 50. And once that's taken out, see what price action does. If it does reverse off the 50 EMA like this, then get your second one out as well, rather than trying to think it's going to continue in that direction, if that makes sense. ATR 59, 82, 62. Just see signal or meta? No, this is MetaTrader. Okay. Yeah, lots of little EAs on it there. Question is, can you get into the yen now? Because it's can I place a trade on the euro yen even though we had a reversal bar Friday? Well, not really. If you've missed it, what you should be looking at is going, well, will it fit my rules? And at this point in time, you'd have to say no. You'd say, well, you need to do your analysis and say, is there a strong horizontal? I have the market reacting to it, yes, but what you're not getting is a buyer bar, so you need to wait for this bar to complete, because this is a seller bar. Yes, it's a higher low, but it's a seller bar. You need to have a buyer bar for you to be buying. So you need to wait for this bar to finish. If it's a buy bar, then potentially go in tomorrow. And then, the risk then is, what's your risk reward is even worse, in the sense that your stoppers now might be like this, or your stop might be even 100 pips like that. And then you're going for 100 pips, your risk reward ratio is ruined. And this is the idea that I'm trying to get you guys to do, is set your trades up well in advance, like the pound, so that's a day or two away from trading. There's no reason why we should miss that, because we can see it coming. Same with the euro yen, same with the euro Aussie. It's not there yet, but it may come in the next couple of days. Okay. The big four banks, Daniel's asked that on Friday, the big four banks have cut their 5-year fixed rate mortgage by 70 basis points on Wednesday to 4.99%. Are they anticipating a cut to the cash rate? No. No, they're just trying to get more business. And it's only 5 years. They are comfortable that interest rates are going to be at 2. They're not going to be back above 4% in the next 5 years. They're going to be at where they're at, which is 2.5 for quite some time. There's not going to be another rate cut. There possibly be another rate cut, but highly unlikely. Certainly not in the next 6 months. They're just doing it because they've had they've got enough of a buffer to be able to do it. They're getting money from the RBA at 2.5, and they're loaning it out to people who buy a mortgage at 4.9, and it's almost double. And you wonder why they're turning over billions of dollars a quarter. Right, going back to last week on Friday, you mentioned that Euro Oz might have an energy, but we don't have any divergence. No, not yet. So this is Euro Oz that we're looking at now, but we're in the area that we should be. We're in the extension area. Do we have support level? Uh, as we were looking at earlier, the support's down here at 40, 40.30, 1.403 off that low here. Yeah, and if we hit that low, price might come back down here and hit that, and then with a higher RSI, and therefore you'll have divergence. Could potentially do that. But the point is that there's no trade on it yet, but there may be a trade. So because we're getting towards the end of phase one, I think it's just the 1.618. Yeah. So we're getting towards the end of, well, certainly in the zone that we expect the market to turn. So we're being prepared. Right. This came in Friday. Pound Swiss short reversal. On Friday, you would have been looking at that bar, which ended up being an inside bar, so you wouldn't have got into it. Ah, that's right. I remember this because we did go through this on Friday. You went early. All right, that's a high test bar. Yes, it's off what you've identified as a strong horizontal. Yes, you're in the sell zone, so to speak. You're above the 1.272. But for me, that's just getting in when you're going against the trend. Just getting in a little early. If you're trading off that high test bar, you need to wait for the next the Thursday's bar to finish, and then you're looking at the trade on Friday, which you wouldn't have got in because you went in underneath this bar here on Thursday, and you got short. And I would have been looking at to go in underneath this bar here because now we've got two bars in the direction. Here you've just got one high test bar. So now you're short and break even. It might come back to the 50. It's been a while since it has gone to the 50. But yeah, I wouldn't have been triggered in, and you're in now and having to defend the trade. So that's my concern with that. Otherwise, everything else is good. You've identified the horizontal, you've got the extension, you've got divergence, everything's there. It's just you don't have the selling pressure, which is, price action, which is one of the strongest things. You think, in this particular instance, that the pound Swiss is cycling off the, well, it looks to me like it's cycling off the 20 EMA, which is this blue one. Yeah. And if we put the 20 EMA on, you can see cycling along the blue. Could be the trend line, but yeah, in a faster moving market like that, sometimes you need to have a shorter moving average to be able to see the cyclicity. You've got these little flag patterns all the way up as well. You chose this one over the euro pound because the high tested level is a very strong level, whereas the euro pound, don't have it. Euro pound, you suggested is not so strong. I'll move the stop loss as they're two consecutive sell bars, and that's the other thing I wanted to tell you is that you do have two consecutive sell bars, but you can only count the trade bar that you went in on as your first one. So you went in on this bar here, so that's trade one. and that's your first seller bar. Okay. So in this, for example, if you went in on this bar here, you don't have two consecutive seller bars until you get this one and this one. Yeah, because that's your first bar. This bar here, yes, it's a seller bar, but you didn't trade on that bar. You weren't in the market yet, so you can't. It's after you enter the trade that you need to say, okay, well now I'm in. Now I need two consecutive seller bars. If that makes sense. All right. Looking at this dollar CAD on a weekly time frame. Be interesting to see what it looks like now after Friday's action. CAD got touched up a bit on Friday. We're waiting to get short on this for new phase one on the daily down, phase one short. Momentum certainly now getting overbought, so you expect it to pull back at some stage, or and change in direction. Got a bit of a horizontal level off the weekly, that low there, but there was something else I looked at. Oh yeah, this high and this high on the monthly. Got that horizontal price coming back up to that. It's also where the 61 fib is, which is our strongest. But the question was weekly. In this weekly, yeah, now you've got a bullish engulfing bar. We've had this great cyclicity on this dollar CAD off this trend line over the last sort of almost 2 years, or more than 2 years actually, since September 2012, almost 2 years. And that's that's the price action that you're looking for. Whether you're trading on the daily, the 4 hourly, the hourly, is the market to come back and test your level. And if we do a fib, we know that it's a 618. Well, I won't do it. You should have all this information here. You've got from the last time it touched that cycle. You've got the 61.8 fib. There's a strong horizontal being this one here. Everything fits the trade, and you would be looking at it. As I said on Friday, I don't know if you were still online at that point in time, but yes, this fits with the. Technically, it fits perfectly. Fundamentally, I just don't know how. I just can't see the getting back up to $1.13. I can't see getting back up to $1.10. I could well be wrong, but that's just where I sit from the fundamental point of view. From a technical point of view, that's exactly what you should be looking at. Maybe a little late. We should have been going after that. This bullish bar here, you should have been going in on this week, on this bar here, if you're trading this on the weekly, which is 15 days ago now. Yep. And then this bar. Does that make sense? It should have been going. Should have been the bar that we traded on, going in and 10 pips above the high of this bar or something like that. And it stops under there. You're almost no reason to move your stop yet, but you certainly be almost half your risk in terms of if you risk 100 pips, it's almost up 50. So, yeah, fundamentally I disagree with it, but technically that makes perfect sense. And those sort of ring lows off a good horizontal support line, it's broken this, come back and retested it, bounced off that. You've got hidden divergence, you've got a strong trend line that the market has respected once, twice, 3 times. Every reason for you to be looking at that. And does that, if that, I was looking to take this short against that weekly trend. If you go, well, I'm confused now. The weekly tells me to go long, and the daily tells me to go short. Then don't do the trade. Certainly don't do the short trade, because the longer time frame is the stronger one. So if the weekly is going to be trending up, then the daily will follow that. I think that. Don't know if the weekly will, but yeah, If in doubt, stay out. Okay. This one's from our Perth course that we did last week. What I wanted to say to you on this is only use one. You don't need to have all three. Whichever one you prefer to use, then stay with that and don't be looking at the others. But you certainly don't want all three on your screen. That just confuses the situation. Just pick one, whether it be RSI, CCI, MACD, stochastic, and stick with that. Yes, we had this CAD yen. We got into this trade. You've identified a horizontal. You've got the Fibonacci. Some people have gone from there, that's okay. A bit of a debate whether you go from there or in here somewhere, but that's fine to take it from there. So you got Fibonacci support. This is all good. This is your first screenshot you sent to me. That's great, but I'd like to see the checklist showing me that you've got the checklist on there. So where's somebody's checklist? Like this, you got. So I can see that you're actually looking at it. Yep. So if we could get the checklist, it might be a separate attachment. That's fine, but you want to be saving that as well in terms of your journal. Okay. All right. This is all wrong. This one here, you said the Euro US is ranging, but you haven't put a range. Well, your range is these two blue lines, I presume. Yet you're saying that the market's giving you horizontal support. Off what? I don't understand. If this is these two blue lines here are your range, then, which doesn't make sense. You've just gone, okay, well, that's all I can see on this particular chart is that's the low and that's the high, so that's my range. You need two touches. Right? Your Fibonacci is just bullshit. I don't know what the hell that is. You started it here and you finished it on the high of that bar, just so that the 50 reacts to the 50 fib. Well, that doesn't make sense. You need to go back and watch the video again, or come and do the course again, because that's a complete misunderstanding of what we're trying to do here. And that to me is a concern that obviously my teaching hasn't stuck with you. So I need you to come back in, or at least get coaching. Preferably come back in and do the course again. EMA's a flat. Well, the 200 is, yes. Bearish price action. Well, do you want bearish price action if it's at the bottom of the range? You've got support, but then you want bearish price action. It just doesn't make any sense. From fib extensions, there's 1.272. Your extensions are the red ones, and how can you say you've got fib extension support when they're all the way up here? It's just, I don't know if it's almost like you're taking the piss. But I need to come back and start again, or at least go through the book and the DVD again, because I'm dumbfounded. I really don't know what to say, and this one's just as bad. The Aussie dollar here. I mean, you're getting a lower high in price, which you've indicated. That's great, but RSI's lower. I don't understand what this arrow is doing. It doesn't, to me, that, and you're saying that you got divergence. Well, you don't. You're higher high, lower high, and lower high. And if this is ranging, where's your range? Is that the top of your range? Price is nowhere near it. Horizontal support. If you've got support, would suggest that you're looking at a buying opportunity. If you're indicating support, and yet you're showing me divergent, trying to show me bearish divergence. Fibonacci, again, what the fuck? I mean, that's, you've just drawn it so it seems to fit between the 382 and the 786. Bullish price action, well, at least that matches your support. EMAs are flat. Look, I think the Aussie's in a range, and maybe that's why you're trying to do that. There's your horizontal levels, which I can see. And you can see, everybody can clearly see how I've drawn my horizontal levels and that the price is reacting to them. Like, these blue lines that you've drawn, the price is nowhere near them. So you wouldn't even be looking at a chart. Um, you know, I wouldn't be able to get fib extensions in here. The only thing you could possibly do is say, well, there's your the last previous downtrend, and we've got the 1.272. So I have a bearish bar off that. This is potentially the only trade you might be looking at, and you go, well, I've got a 100 pip stop, and I'll target down here for 178 pips. So at least it's 1.7 times my risk, which is okay. That's the only thing I'd be able to do, and I think that's pretty weak because there's a lot of crap in here that it now looks like it's in a tighter range, being 93 to 94 instead of 94 to 92. Your momentum's in the middle. It's just, I think that's a weak trade, even looking at it for a range. So the owner of this chart, I need you to come in and do the course again, do some homework on the videos, because this is just all over the shop. You just scratch it and start again. Aussie Swiss. This one came in on early last week, last Tuesday. Direction going long. Risk 3 point, lot size risking 1%. Woohoo. Higher highs and higher lows. Yeah. You can't say you got trend line support because this is you're just joining these two touches together, so that's only your second touch. It's the third one that we need to say, okay, now I've got trend line support. Can't say it on that's just your second touch. This little flag pattern, I can see that that's something that you're trying to trade. That's fine, but and you've got it there, bullish chart pattern. But literally, I would not be saying that that's my trend line support, because that's only your second touch. The other thing I notice is that you've drawn your fib from this low here, and I'm not exactly sure why. Maybe because of this trend line, you're seeing that it breaks this trend line and retesting it. But for me, that if with the Aussie Swiss, there's a cycle above the EMA, there's another cycle above the EMA, and there's a third cycle above the EMA. So you'd be looking at drawing your fib from that to there and saying, well, I've got the 618 around here, and you'd be looking at sort of getting long in here somewhere. Being last Tuesday, I think you're looking at it at this point in time, or maybe even this bar, and you could potentially say, okay, well, that's not a cycle, really. It's just going sideways at this point, but it's starting to lift off from the 50 EMA, so now we can have a look at it. So you're looking at off this bar here. Issue of going in there at that point in time above this bar is, where's your stop going to be? Should have been going after this bullish bar here, and you could potentially have your stop underneath these two EMAs, and have your stop there. Have your stop here for 92 to 100 pips rather than underneath this, which adds another 20 pips to your stop. But that's obviously, under that low is obviously the stronger than it is, because that low is roughly about that there. Yeah. And now you'd be half a times what you're risking up. So I presume you didn't get in because this is a seller inside bar, and you shouldn't have left your stop your entry in after that. Okay. Otherwise, so just be careful with your trend lines. You don't have trend line support, as you just joined 2 touches again, had it bounce off at another one. Yes, fine. And your Fibonacci's, I'm not exactly sure why you've drawn it from there, from this low here. I would have gone from this low because of the cyclicity. If you might put on there saying fib retracement support, because I've drawn this fib from there based on this break of this head and shoulder pattern and the retest of it. Okay, pound yen. Another one I think you went into, like your other pound, your pound Swiss. I think you went in too early. You went in off that little bar, an inside buyer bar, and it's barely a buyer bar. It's more like a doji by the look of it. Everything's there, I agree. It's all there, higher highs, but you're just going in a bar too early. You're not being... all your analysis sound and you're picking the turning points, but unfortunately I think you're going in a bar too early. Had you waited, so this, you're looking at that as a test bar. And had you waited for that extra bar of buying higher highs and higher lows, you would have been looking to go in above this bar here. I know your stop's under here and you're only, because you've sent me an email after this, but you're only just managed to hang on, and you still only just managed to hang on. But had you waited and tried to go in above this bar, you wouldn't be sitting there sweating and carrying a loss. So one bar doesn't make a new trend, and I prefer if we sort of wait for that extra bar, and then we go, okay, now you give away, what you would have given away. You would have given away 20 pips in waiting. Yeah, you give away 20 pips to the market by not being in it, but then you're not sort of, now you're giving away more than 20 pips, you're giving away 20 bucks, you're actually giving away cash now that you're in it and looking like it may stop you out. There may come times such as this where you go, oh, I can't miss this opportunity, that's a low test bar. But if you just wait and say, well, there's 45, 50 pips, if I give it away, just make sure that the sentiment is there that I want to see, and then I'm going with it. Yeah. It's better to give the market the 50 pips than get in and have it cost you more than 50 pips for actual hard cash. Yeah. Would you agree RSI is starting to make lower highs on this chart? Wrong chart. Which chart are you talking about? The Aussie Swiss. Is that one we're looking at? Lower highs. Well, in terms of the cyclicity, yes. This at this stage, this high here in RSI is 80.7, and whilst over here it's 87. So, yeah, sure. But with reversal divergence, which is what you're looking at up here, you need to see it at the end of the move. So what you're kind of looking at, this wasn't exactly reversal divergence because it's a lower high. Okay, this is reversal divergence, and you need to see it at the end of the move. Yeah, so we're seeing higher highs there, and at the same time we're seeing lower highs. That's reversal divergence, and you need to see that at the end of the move. Okay, I'm not looking at it from the cyclicity in terms of from this high to this high, or that high to that high, or even that high to that high. Reversal divergence is not that. Reversal divergence is the buying sentiment and the buying momentum that pushed the price from the away from the 50 EMA. I need to see that dying out, and I need to see it dying out in the momentum. Okay. Yes, in terms of, we'd look for hidden divergence in terms of a market that is trending, such as the pound. You look at hidden divergence. So what we talk about in hidden divergence, and this is in what we go through in the platinum, is that from this low to that low, it's a higher low in price, but clearly a lower low in momentum, and that's a bullish indication. And in that instance, we're looking from the cycle to cycle. Yep. But for reversal divergence, no, we need to see it at the end of the move. Okay. Dollar CAD. Yeah, mate, just be patient, wait for that extra bar, let the market take it rather than you, because you wouldn't be in and trying to defend that. Dollar CAD. This is, everybody was waiting for the selling intention in this. We had that good. If you actually went to the high of that bar and the high of that bar, you've got that touch on this bar on the dollar CAD. You go from the high there to the high there, and we had that touch, but now it's broken it. And we had, this is a seller bar we would have tried to go in underneath. This is a seller bar I would have tried to go in underneath. And I wouldn't have tried to go in underneath this bar because that's an inside test bar, and that's a test bar, but it's also a higher high, higher low, so I wouldn't have tried to go in underneath that. As underneath this bar here, I would have been looking to get short, and obviously that didn't come through. So now it's a matter of being patient and waiting to see what the market does. May have support from long-term trend line. Watch this. Yep. So it could do. Only risking 0.25% because you've got some other CAD trades on. It's good. And I'm kind of, in one sense, okay with the market coming up here because the horizontal, that this price didn't really act to a reasonably strong horizontal or a horizontal level that we could see. But right now, if we put the price on that one, then go to the monthly. We go to that high there, now we're getting closer to it. Yeah, does that make sense? I'm coming up towards this horizontal, and horizontals are far stronger to trade from, so if it tags that and then turns and heads back down again, that's the ideal sort of thing we're looking for. And trend line, I'm not really worried about it. Maybe experience network connection difficulties. You guys still there? Yeah, you're still there. Cool. Go to webinar. Just brilliant. CAD Sing. This is good. Yes, you're not overexposing yourselves to CAD, and you're waiting for the buying intention, which we don't get. You're not front running the order. Being patient, waiting for that buying intention, and obviously we don't have that. Yep. No horizontal. Yeah, I'll be leaving this one alone until we get a cycle back above the 50 now. It's just gone all a bit messy. So you need to cancel that trade, obviously, because it's not working out the way we or cancel that order. It's not working out the way we expect it. Ozzy, the one thing I wanted to say to you on this, and I know you're online, is are you having higher highs and higher lows? That'd be my question to you. Is if this is true cyclicity, then this move here, often the 50 EMA, should have made a higher high, and that's what you want to see. And that's what the question is. Are we seeing higher highs and higher lows? Not in price. Yeah. I need to see it in the bigger picture, in the cyclicity of the market, and such as the pound is making higher highs and higher lows. Yeah. This one, Aussie Battler, isn't. I wouldn't have been trying to buy it here unless you're trading it as a range, but you wouldn't have been able to identify it as a range at that point. But wouldn't have been doing a trend continuation because you're not making the higher highs. Now you're making the higher highs, you would have been looking at going in here potentially, but it's kind of failed to do that, and you might have been in the trade here off this swing low, having got in there potentially, and now you're at that same price, back where you got in, and again we've made a bit of a higher high than here, but I see this as range bound. You reviewed the manual and didn't go in. Well, that's good. That's fabulous. All right. And last one. Last one is, this was from last Sunday, so it is a bit late, I'm sorry, but this is the Canadian setup. And you've got the fib correct. You've identified that larger horizontal, which I think price is getting up to. That's the monthly horizontal. This one is also, it's a horizontal that could be effective, but it's not. Didn't really get there, and then it broke it. This is your target. That's all good, and just waiting for bearish price action because we haven't seen that yet. You know, high test bar is one thing, but you need to see the follow through. Yeah, just like any sort of premier athlete, you need to follow through. That swing coming back down, and we're obviously not seeing that yet. Okay, it's good identification now. It's just being patient because it could set up again, and yeah, this high test bar. This is a bullish inside bar, so there's no follow through. We get an engulfing seller bar. Not really ideal, but we expect the market to turn. We don't get an entry. Now we're just waiting to see what happens if we get another potential. Okay, that is us done for today. Thanks for your time, and we shall see you again on Friday. No, not Friday, sorry. When's the next one? Wednesday. Chat on Wednesday. Right, yeah. Thanks, guys.